Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. It is May 24th, 2024, and I'm here to bring you some trading levels in some popular individual company stock symbols for the upcoming week of May 27th, which in fact will actually begin one day later, of course, because of the Memorial Day holiday. So trading will actually next week, of course, start on the 28th. So before I get going here, the usual disclaimer, everything that I'm about to present here is for informational and educational purposes only. It is not to be construed as investment advice. Precision Trading Labs, we are neither money managers nor financial advisors. So let's take a look at Amazon here. So right now we're sitting here at about 181 here, and we're actually sitting midway in between two trading levels here. If we look below here, right here, we can see right here this was the origin of this gap here, and in fact, if we look at this in a 1-hour chart here, we can clearly see that there was a rally up here and then a point of consolidation here, and then that pop that occurred over here. We can think of that as an exhaustion of sellers here, okay? And really, if we think about what goes on in terms of trading within this region here, within this narrow range here, we can think of the shares that are acquired by willing buyers. We can think of that as demand, and we can also think of the shares that are offered by willing sellers as supply. And so within this relatively narrow range, we can actually supply and demand are in balance. And then right here, there is that exhaustion of sellers that occur right here as buyers run up the price chart in order to then find willing sellers. And that's where these trades occurred here. Okay. And so right here, where supply and demand were in balance, once this exhaustion of sellers occurs, all that's left in its wake is demand. Okay. And so when price returns to a zone of only demand, which in fact we now think of as a demand zone here, when price returns to a demand zone, there is the expectation quite often that we will then get another wave of another wave of buying that comes out of that demand zone. Okay, because essentially there is nobody willing to sell at that price until it gets down here. Okay, and so as a result, more or less what's going to happen a good amount at a time is that buyers again will start to buy down here because price was in here only for a very brief amount of time, and so that will drive price. We will then get a bounce out of there. Okay, and so again we think of this as a demand zone here. Okay, up here it's the exact opposite. Right here we have an exhaustion of buyers that occurred. Okay, right up here we had this rally-based drop formation. Notice price came up, consolidated there, and then dropped out with that very bearish candle and then another bearish candle. We're looking at the 2-hour chart here. So for the better part of 4 hours, price kind of came out of there with a great deal of energy, and that signifies, rejection out of this area. So when price returns here, there's the expectation that in fact we would see another wave of selling out of that. And so from here, we could express a bearish trade out of here. One could, of course, short Amazon here. One, of course, could buy a put. And of course, then one could also buy execute any number of simple options spread trades. The most basic, of course, would be to buy a bear put vertical debit spread. And of course, one could also do a bear call vertical credit spread in order to collect premium. But one would execute all of that based on its proximity to this supply zone there. Okay, so that's the story with Amazon. And so in terms of trading zones, these are the areas that we would be looking to either buy, or we would be looking to execute a bearish trade up here, and we would be looking to execute a bullish trade down here. And right now we're just kind of sitting in between. And so we're kind of range, we're sort of we would be waiting for a price to get to one region or the other. In terms of executing a trade. And we can see we're about 5.5% away from that supply zone here and 4% away from that demand zone down here. So in the short term, obviously, could it get here quickly? Of course. On the other hand, it could be, it may be, could be a few days till it gets here, but that's where we would be looking to trade Amazon. Okay. We take a look at Apple. Okay, here's where we are on Apple, and in fact, we're actually we're actually much closer to a supply zone here as compared to Amazon. We can see we're only about 1% off from this supply zone here. Okay, so this is where we would be looking to potentially execute a bearish trade if in fact price pops up here a little further. And so obviously that could happen very quickly since we're only about 1% away from here. Down here, this is an area where certainly price rocketed out of here. This is the origin of that very strong move. But this was because price was in here, came back here again. We can think of this more as a tested demand zone and not a fresh demand zone, because price was here, it left and came back here again. Consequently, it kind of chewed up some demand that was in here. When price returns here, this could still work. Having said that, though, it's not a fresh demand zone, because essentially some of the demand has already been chewed up by that retracement back into the zone. Okay, so we have a supply zone here about 1% above current price, and then about 3.5% down. We have that area of tested demand here. Okay, and then also right here, this is another area of tested demand. Okay, notice price came up here, and then this was actually a small gap that occurred, and then notice with that red candle, price dropped, consolidated, popped, and then it came down here again, and then bounced out of there. Okay, this is also a level of tested demand. Okay, so when price comes back here, particularly because price drove relatively deep into this region here that was established here, it's quite likely that price would break here. So I would not be really looking to buy out of this region here. That area is around 187 or so. So if we started to see a push down on Apple, I would expect it to probably get down to this 183 area. And then one could in fact trade off of this, but what we would be looking to do is, rather than just buy off if it hits the front line there, we would actually wait for it to kind of drill into this zone a little, and then actually then start to reverse out of here. And we think of that as what's referred to as a confirmation entry here. Okay, so there are times that we would actually buy when it's coming down and hits this front line, but in the case of here, because of the fact that this has already been tested, what we would actually be waiting to do would be watch it drill into the zone a bit, and then look for it to reverse, and particularly maybe even see like a very bullish 30 or 60-minute candle coming out of here, and then only then buy, as opposed to hitting a fresh demand zone where oftentimes we're comfortable just buying and then looking for the reversal after that. Okay, so that's Apple. We take a look at Microsoft. Okay, so here's where we are now on Microsoft. Below here, this is actually a nice fresh demand zone here. We have a drop base rally formation. Okay, so when price return, so now we're about little over 2% above this region here. And then if that region for some reason did not hold, then there's another demand zone about 7.5% down. Okay, and the way we would structure this trade, okay, is because this is a fresh zone. When price hits that front line, we would generally be comfortable just buying off that front line, as opposed to waiting for it to reverse in the zone. Okay, so right there is there is what our trade would look like. Our entry would be basically at 420.42, and then we would place our stop a bit behind that demand zone. And a lot of times we'll use a percentage of the daily average true range to help us to determine how much wiggle room we're going to give, breathing room we're going to give this thing behind the zone there. And so a lot of times we'll use about 10% of the daily average true range. So since this is running at an ATR of about $6, we would give this about another 60 cents back here. And so that would bring you down to about 417.40. So more or less the way this is kind of sitting right here. This is sort of what this would look at from a risk reward perspective. Here's our risk in the zone here. That would be a 1-to-1 trade. That's a 2-to-1 trade. That's a 3-to-1 trade. Okay, so again, that's where that demand zone is down here. And there's really no fresh supply that we'd be looking to trade here. Also, I keep mentioning these supply and demand zones. If you look at the a link that's below this particular video that you're looking at here on YouTube, if you look at the link, there is a link below this video. That is actually another video that we had done that's a slightly deeper dive into the supply and demand concept. So if you're interested, you could check that out, and that'll give you some more information about the foundation of our trades here. We take a look at NVIDIA here. So right now, there's really nothing to talk about in terms of trading. NVIDIA announced its earnings a couple of days ago, and in fact, that was the impetus for another rally. So in fact, that actually kind of what drove the markets, the broad markets, to kind of to another all-time 52-week and all-time high. So now we're in new territory after that earnings announcement. So there's really no trading levels here until there is some, there's some movement, and it makes a right turn, and there's some consolidation, and then at some point it will then create some new zones. But at this point, there's really nothing to look at here. All right, so that's the story with NVIDIA. If we take a look at Meta. So right here on Meta, here is where we are now. We closed at around 478. Right here is a drop formation. The thing though is about this, and I would, even though this is 2.5% down, this is certainly an area of supply. Having said that, though, this supply zone was actually driven by a negative reaction to earnings. Okay, so this is not just the supply and demand concept here, but there's also a change of perception here created by an unfavorable reaction to its most recent earnings announcement. So consequently, one could trade out of here, but I would same way earlier I talked about using a confirmation entry. I would do the same thing here. So we would be looking for price to drive into the zone, okay, and then we would look for it to reverse, and then once it showed its colors and actually reversed out of there, we would be looking for kind of a bearish 30 or 60 minute candle out of there that kind of closes at the bottom of its range, and then we would then be looking to express a bearish trade out of there. Okay, but I would not just wait. I would not trade this just when it just hits the front line, because of the fact that I'm not fully confident about this level, because of the fact that this is just driven. This is an earnings driven gap. Okay, so I'd be looking to, I would want some confirmation about that. Okay, so that's 478 though is where we closed here, and then about 20 bucks below here, which is about a 5% move. Right here we have a rally formation. Notice that very, very bullish candle that comes out of there. There's a little pause, and then notice then that there's that fairly energetic rise up to about the 478 level. So this is an area where supply and demand were in balance, and then of course there was that exhaustion of sellers that I talked about before, and then at that point it left in its wake this demand zone here. Okay, so that's about 5% down. Okay, so that's the story with Meta. Taking a look at Netflix here. Right here we have below here, here's a rally formation. This is actually a really clean level that's and very, very clear here. Price gapped up here. Okay, notice then price consolidates, and then notice right there, that's that very, very energetic rise out of this area of consolidation, again leaving in its wake a demand zone here. And so when price pulls back here, which is about 3.5% down, about 15 bucks down, which is about 3.5%. Again, this is where we would be looking to express a bullish trade. Right in here, there is in a lower time frame, there is a level of demand in here, but this is a much lower time frame in here, and also it's not fresh demand because of the fact that if one looks back at this wick in here, there's really some trading that's going on in here. So really, one could perhaps find a trade in here, but I think the safer bet is simply to wait for the retracement back to the 622 area. Okay, so that's an area of demand here. And if we now go over here and we look up here, and we actually have to go back about into 2022 here. But if we go back far enough, we will see right here there is an area of supply right here. We have that rally-based drop formation. And of course, we're looking at this in the 2-hour chart. If we look at this in the daily, this really kind of tightens up. And but you can see right here, this thing, kind of just, dumps out of here. And so right here again, supply and demand were in balance within this 2-day range in here. And then right here, of course, we had the exhaustion of buyers that I referred to earlier. Okay, so that's the that's that area of supply. So we have an area more or less, relatively equidistant here. In both cases, this is about 3% up. This is about 3.5% down. So within this relatively narrow range, on either end, we could see a trade developing in Netflix certainly next week at some point, depending on how it moves. So there's Netflix, and then lastly, we'll turn to our buddy Elon here at Tesla. The Tesla chart is actually kind of interesting here. Right here, we closed here at about 179. And so we've got these two levels below here, which I'm going to talk about briefly here. This is an area of tested demand, okay? Notice price drops here. And if we actually drop this into a 1-hour chart, we would clearly see there's a drop-based rally formation here. And price kind of pops from there. And this gap here, unlike what I showed you before on Meta, this is not an earnings gap, okay? Because right there, that cross, that was the most recent earnings announcement, okay? So in fact, that's an earnings gap, okay? But this right here is not an earnings gap, okay? This is certainly post earnings here. So, and then when price returned here, we can see we had an area of demand here, and then price popped out of here. Consequently, this is an area of tested demand now. It's no longer fresh demand. Unlike this, which is fresh demand, okay? But what I wanted to point out is this, though. Notice right here, this is the 50-period simple moving average, okay? So even though we're looking at a 2-hour chart here, this is actually the 50-period moving average based on the daily chart, okay? And so we can see that this 50-period simple moving average is also overlapping this demand zone. That's oftentimes an odds enhancer for a trade. So even though this is tested demand and we generally have less confidence in it, the fact that we've got the 50-day period, the 50-day moving average here, that's often an odds enhancer and will oftentimes act as support. So we'll be looking at that if we get a pullback here, which is about 5% below current price at the moment. When price returns here, though, we might actually be looking to do a confirmation entry out of this tested demand zone because of the fact that we're also in the presence of the 50-period moving average here. On the other hand, if this would break, okay, down here, then we certainly have an area of fresh demand here. We have a rally formation. Notice that very, very bullish candle that comes out, and then it kind of pops there, and then of course then it continues on up here. Also over here, we can see that this is the daily lower Bollinger Band. So this is the 2.0 standard deviation Bollinger Band here, and again based on the daily chart. So even though we're looking at a 2-hour chart here, this is based on the daily. And notice then, okay, when price rolls over here, this lower Bollinger Band is going to also kind of roll over as well. And so by the time price, if it gets back here, you're probably going to see this daily lower Bollinger Band laying pretty much on top of this um, of this demand zone. And again, that might actually be an odds enhancer for this demand zone. That'll indicate that price is very stretched to the downside. And so consequently, between this demand zone and that lower Bollinger Band, this might actually be a high probability trade here. Having said that, that's a good 10% down. So we may not get there for a while. So at any rate, that's the story with these popular trading symbols. Thanks for joining me, and I will see you next time. Take care. Bye-bye.